Now, the market's initial excitement about the cheap loans for European banks definitely faded overnight as it became clear the move offered, well, little hope for the region's debt crisis in terms of an ultimate solution. The mood was evident in copper. It hit a one-week high before settling off the peaks by the end of the day. Larry Shover is Chief Investment Officer at SFG Alternatives and joins us now from Chicago. Larry, great to have you on board again as well. Give us some thoughts on copper, because it just seems everything is working against copper at the moment.
Everything and everybody is so darn bearish, but yet it's still at $74.50 a ton. There's a reason why everybody's so bearish, and it's so obvious. Right now, people are looking for liquidity. In Europe, people are getting out of things, whether it be commodities, what have you. On the other hand, you have people worried about China, saying they're not going to loosen credit quick enough. At 8.5% GDP and 4% CPI, people don't think they're going to be loosening credit, making it really hard for copper to rally. And the third thing, right now the euro currency is trading about 130 to the U.S. People are calling for 120, making the case for copper much harder all the still. Now, with all that said, that makes me bullish. When everybody's running away is when you have to go in, because there's also some bullish factors to it as well.
Can I switch to gold? And just for reasons of time, I'd love to ask you more about that. But gold I want to get to, because this has been one of the more interesting ones to watch the past couple of weeks. And as we head towards the end of the year, I guess some people might feel a bit shy about gold, seeing it back at 1,600 or thereabouts so quickly. Do you think that bull market is in any way over, Larry?
I don't think the fundamentals for gold have changed one iota. Right now, people are selling what they can, not what they want to. Again, it's like liquidity. People have to get out. And the fact of the matter is, gold will be a good buy, because the fundamentals for the ECB, no matter what you say, what you read in the papers, at the end of the day, there's going to have to be a quantitative easing program in Europe. So with that in mind, I don't see why gold can't go up to at least $2,000 an ounce in 2012.
And what about physical demand as well? What's the picture there?
Well, physical demand is actually going to pick up quite a bit, because right now they're saying production cost is about $1,100 US per ounce. The minute we get down closer to that, you're going to see production tail off, but counterintuitively to that, you're going to see demand rise, because people are going to realize that, hey, it's getting to that point where it's expensive to make. It's going to make it more scarce, so therefore people are going to scoop it up. I mean, the fact of the matter is, gold took a huge dive last week. We all saw that. But again, viewers have to realize it was really out of desperation and nothing else. The fundamentals have not changed.
Larry, one of the other interesting things over 2011 was that the continual calls for weakness in the euro, and there was a point there we thought it would actually never come. The last few weeks, though, we have definitely seen that currency hit hard. What do you see is exactly going on, and what's the outlook for 2012?
Yeah, that's funny, because back in August we had 143 euro, and I kept saying it's going down, it's going down. I was so late to the party, but finally it did happen. But now people are so bearish, calling for 120. I'm not so sure we're going to see 120, and this is why. Right now, people are linking the euro to its weakest link, which would be Greece, Italy, and Spain. We'll see what happens, but at the end of the day, if the euro stays together, which I do believe it will, it's going to end up being linking to its strongest link, which is Germany. So is 130 fair value? Well, the market says it is. I don't think we're going to see it much lower. I think we're going to see it here or much higher in the next 12 months.
Any predictions for the Aussie dollar, Larry? Not to put you on the spot, but we know that you do watch the Aussie.
No, I traded the Australian dollar for years, and it's the most perplexing trade on the planet. It's worse than copper. It truly is, and I love trading it, but it is really hard. The fact of the matter is, I do think we're going to see commodities take a rising projection between now and the next 12 months. I can easily see all the Australian dollar by the end of the year at the end of 2012 being at its 2011 highs, up around 106 to the dollar. It's bound to happen. Just wait for the printing presses in Europe to get warmed up, and off we go to the races with commodities.
Yeah.